Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. So in this particular video, we are going to be talking about the Heiken Ashi Smoothed Indicator. Alright, now this is a custom indicator, so you will need to download it from a reputable site online. And after downloading the indicator, then you will need to add the indicator to your indicators folder before you can be able to add the indicator to your charts. And after adding the indicator to your indicators folder, you will need to restart your trading terminal. All right, so this is the indicator we are going to be talking about in this video. Okay, now this indicator is quite unlike the standard Heiken Ashi. All right, I'm just going to be adding the indicator to the chart right away. I'm going to be inserting it. Custom indicator. This is how the indicator looks like, the Heiken Ashi Smoothed Indicator. This indicator overlays smooth candles directly on the traditional candlesticks. So it makes it easier to spot market trends with precision. As you can see, the indicator shows us the direction of the trend. The indicator enables us to easily spot market trends. Okay, now this indicator actually excels at filtering out market noise and fake outs. So it actually gives you a clearer insight into price movements. Now, as we can see on the chart, when you notice green candles, it indicates potential buying opportunities, while red candles indicate selling opportunities. Now, the simplicity and the effectiveness of this indicator makes it quite essential for traders who value trend following strategies. You know, as a trader who aims to identify trends and, you know, trade based on trends, then you can find this indicator really useful. Okay, in as much as the indicator can be effective, it does not guarantee profit. All right, so do not assume that your profit is going to be guaranteed if you're using the indicator. Okay, whether you are a beginner or an experienced trader, the indicator can actually help you streamline, you know, identifying trends and all of that. But it's important to note that profit is not guaranteed. So let us talk about identifying good trading opportunities, and let us just look at a few examples. So now for a buy trend, for a buy trade, what you have to do is to look out for the indicator to turn green. All right, the indicator needs to turn green, and then just wait for at least 3 consecutive green candles. All right, we can see now we have 3 consecutive. The essence of waiting for 3 consecutive green candles is just to confirm that the trend is actually, you know, valid. For example, we can have a situation whereby it is just a minor move back, especially if it's a trend reversal. For example, if we had a previous bearish trend, all right, we had a previous bearish trend, and then we are expecting a bullish reversal, and then you found out that the indicator started forming green candles. Remember that there is a possibility that that movement could be a pullback, and if you just jump in, you might end up getting stopped out. So you might want to wait for a few candles, green candles, I mean the candles formed by this indicator. You might want to wait for a few of these candles to form, and then make sure that you also have a bullish candle at least before you now go ahead to enter a buy trade. And then you set your stop loss below the previous swing low, and for your take profit, you can use the nearest resistance zone, or you can just wait for the red candles from the indicator to form. All right, now using this example, because this one shows a longer trend, using this example, but even with this, although if we had entered somewhere around here after waiting for a few green candles and then waiting for this bullish candle to get to this point, we would have caught about 850 pips. All right, so it's quite a good catch. Now imagine if because this indicator is a trend following indicator, all right, this indicator helps you to stay in trends. It helps you to identify trends and to trade trends as long as possible. All right. So when you are using this indicator, and let's say you have waited for a few green candles to form and you enter your buy trade, you set your stop loss below the previous swing low, and then for your take profits, you can either decide to use the nearest resistance, or you can wait for red candle bars to form in the indicator. But mind you, if you have noticed that the trend is a strong trend, or you are trading continuation patterns. For example, you are trading this continuation because this is a bullish trend, right? As we can see, there is a formation of higher highs and higher lows. But when you started, when you identified this trend newly, you wouldn't have known how long this trend would have gone, right? So when you enter this buy, what you just need to watch out for is, first of all, a question you should ask yourself is, what was the previous price movement before this bullish trend started? Now, the previous price movement we had was more like, it was a consolidation, actually. It was a consolidation pattern that we had before this bullish breakout. Now, before the consolidation, we also had a bullish move. So there is every tendency that after the consolidation, we could have a bearish reversal, right? And on the other hand, we could still have a bullish breakout. Now, because you are not sure where the direction of the trend is eventually going to continue, you have to be cautious, okay? So having already had a bullish breakout from this resistance, remember that the bullish trend already started from somewhere around here. That is you remember, this is the first low. This is like this is the high, this is the first low. This consolidation, there was also still consolidation here. So I'll call this the first high, the first low. Then we had a higher high and higher low. So this pattern, this bullish pattern, bullish structure already started forming right from the consolidation zone. Then we had a breakout. That breakout would have given us an idea that a bullish trend is about to continue. So if you are trading a continuation pattern, you might decide, instead of setting your take profit at the nearest resistance, you might decide to just use the indicator instead to determine your exit. And then before you exit, do not just exit after one red candle forms, because that could just be a pullback like what happened here. You can see that this was just a pullback. This red candle or these two red candles that form was just a pullback. So instead, wait for about 3 or 4, like 1, 2, 3, 4. Then this would have been where we would exit our buy, so that you don't leave a lot of money on the table. All right. So basically, that is how to use this indicator. As for a sell trend, the reverse is just the case. If you are in a sell trend, make sure that you wait for at least 3 red candles to form, confirm the entry signal. You can look for bearish candlestick patterns, and then after entering, you can set your stop loss above the previous swing high. And then for your take profit, just like in the case of a buy trade, you can decide to use the nearest support. It depends on you, actually. It depends on the trader. You can decide to use the nearest support, or you can actually decide to wait for a bullish candlestick pattern to form, or a bullish signal rather, from the indicator. So when you have a bullish signal from the indicator by the formation of green bars, like minimum of 3 is my recommendation, minimum of 3 green bars, then you can use that to exit your sell trade. So this indicator is quite easy to use. All right, and make sure that when you are using this indicator, you also observe good risk management, because no strategy guarantees profit. All right, no indicator guarantees profit. So make sure that you observe good risk management. It is very, very important. So when you are entering a trade, when you're entering a trade, make sure that you do not risk more than 2% of your capital in one single trade. All right, for the purpose of capital preservation. Okay, so that in the long run, you don't end up, losing a lot of your capital, or a significant amount of your capital, in just a few losing trades. All right, so that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching and happy trading. I'll see you in the next video.